Actually, it will become some competition for the world's reserve currency from that point of view, but it will also discipline us, I think, as well. So I don't think the dollar disappears. I think maybe Bitcoin and the dollar and maybe another currency start to dominate. We'll see. That's sort of been the history.
Hey guys, welcome back to Everyday Finance. In this video, Cathie would discuss about Bitcoin. According to Cathie Wood, notice that Bitcoin went up during the time that the area banks were having trouble. In other words, it was likely waiting for the financing scheme, which is true that the Fed put in place, which was a small step toward easing and then a turnaround. We believe the Federal Reserve will lower interest rates. There is now a lot of business data that is hard to understand. A business tells us something and something very different from the government when it comes to business. They don't match up at all. That's why Cathie would find it very interesting. The Federal Reserve will understand it's under a lot more stress, and the regional bank problem was the first sign of it. They'll remind us again, and then they'll start cutting rates. We think it will be less about real economic data from now on, and lots of things Cathie would discuss. So please watch the video to end, and share this video and subscribe our channel, Everyday Finance. Thanks.
Yes, I think when people put something in their portfolio, they're apt to watch it a little more closely and maybe seek out a little bit more education, even if their advisors have put them in. And certainly the advisors have to educate themselves. So I think once more and more people educate themselves and understand what this is, it's a technology, yes, and it's a monetary system, then I think they're going to understand why it's taking off in emerging markets and why everyone should have a little bit of an insurance policy called Bitcoin. And last year, the regional bank crisis was a great case in point. I think many people were shocked as regional banks, the KRE, the regional bank index, was imploding. Bitcoin took off. It went up 40 to 50%. And it was the first time that traditional investors, many more, took note. Wait a minute, why did it do that? This is supposed to be a risk-on asset. It's supposed to be very volatile and highly correlated with risky assets. What just happened? And what they learned there was that, hey, it's a risk-off asset too. Why? Because there's no counterparty risk like there is in our banking system. You're not going to be held hostage like you were in 08, 09, wondering if your bank was going to survive or you'd get any more than 250,000, the guarantee, the FDIC guarantee out of your bank. So this doesn't happen with Bitcoin. Education. Wow. How many risk off and risk on assets are there? So, I think, the more people come in, the more they'll be comparing and contrasting what this is to what we have in the traditional financial world. And guess what? This is better. This is better. And it is why emerging markets, talk about needing an insurance policy in hyperinflating economies. It's an insurance policy against counterparty risk, inflation, and deflation. It's amazing. Yeah, no, it's interesting. The Lightning Network is making some good strides. And on that brainstorm I mentioned, the convergence of AI and Bitcoin, this is really happening in the emerging markets. And I was on that brainstorm and I was saying, what? Completely redefining division of labor in emerging markets. So we think of giga jobs here or giga work. Put that on steroids in emerging markets, and the Lightning Network is enabling it. Now, what you're asking in terms of Bitcoin serving as a means of exchange, not just a store of value, and maybe even becoming a unit of account, so serving the three roles of money. I do think that will happen. We've done another few podcasts and brainstorms with Art Laffer, who I don't know if you or your listeners are familiar with Art Laffer. He's a famous economist. Uh, you have to be very familiar with economics and different economic theories. Laffer curve is all about tax policy, but he's a monetary scholar as well.
According to Cathie Wood, it happened near the end of the fourth quarter. Bitcoin led the market at the beginning of January. That's why Cathie said we're keeping an eye on Bitcoin right now. Of course, Cathie Wood selling when we hear bad news as soon as the 8 Air 11 Bitcoin ETFs are accepted. This is high-frequency dealing, and don't know how far that will go. People are only going in for a short time to get a boost and are now leaving, but big businesses and these shopping malls are going to start moving in. Then we'll look at the value of shortage. What do you think the price should be? Everything we do is geared toward the long run, but short times are needed to make long ones. That means we'll be in print by 2030 for our base case. We say that we think Bitcoin, which is getting close to $40,000 right now, will reach $640,000 by 2030. Let's back to the Cathie Wood interview.
He was my professor at USC in the 70s. And he is 83 now, and I've never seen him more excited because what he's saying is, wait a minute, I've been waiting for this since Nixon closed the gold window in 1971. So a new monetary rules-based system. And then I've asked him, and these podcasts were around this topic, wait a minute, could it become a means of exchange? Well, when it has proliferated throughout the world, and of course we're going to enjoy the scarcity value of it as institutions enter, once that's fairly ubiquitous, then what he thinks is that it will become more of a stable currency, or it'll act more like gold itself, just much more stable than Bitcoin. And it will, in more and more economies, especially emerging markets, it will serve as a means of exchange because, it won't be straight up. And if you bought a pizza, you paid in future dollars, $2 million for a piece of pizza. It's not going to be like that anymore. It's going to be, okay, I paid up a little bit, but the utility is so great that I was willing to do that. No. It's a really good question. We do believe, and El Salvador probably the first, that central banks will start including Bitcoin in their reserves. And actually it will become some competition for the world's reserve currency from that point of view, but it will also discipline us, I think, as well. So I don't think the dollar disappears. I think maybe Bitcoin and the dollar and maybe another currency start to dominate. We'll see. That's sort of been the history. And as far as CBDCs, it's very interesting. In the United States, I definitely don't think that's going to happen because this is a states' rights issue. And I know in the state of Florida, where we are, we moved Ark here 2 years ago. In the state of Florida, Governor Ron DeSantis has said a CBDC would not be welcome. All that would mean is government surveillance, invasion of personal privacy, like in China. And so if it's not going to work in Florida, it's probably not going to work. You won't get all 50 states. That would be a big problem, right? And I don't think it would work I think the politics would basically prevent its becoming ubiquitous in the United States. Absolutely. That's the way we think this is the route. We think that stable coins are the bridge into effectively into the internet financial system, and are playing a very important role, and probably will continue to play a very important role from an interoperability point of view and so forth. So yes, we definitely think that's going to go on. When you think about CBDCs, what are they? They're still got human beings making decisions. There's no mathematical metering. It's just a human being making decisions and setting a policy and then changing its mind. Whereas, a policy that everybody understands, these are the rules of the game, and it's not going to change. Mathematically metered, a block every 10 minutes, having it roughly every 4 years, 21 million Bitcoin, never more. I think that is moving us away from fiat currency, taking the human being out of the loop, importantly.
Cathie Wood said we've been through something similar before, when derivatives were first introduced, and the SEC and CFTC were competing for control over the right to regulate derivatives all the way to the Supreme Court, which this most likely will, and that law that was forced that way, both the SEC and the CFTC can keep an eye on options. But their jobs are very different and don't overlap. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.